Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings. Today we're diving into the somewhat less than thrilling world of a semi-annual shareholder report, but I promise, like finding a forgotten 20 in your old jeans, there are some gems in here. We are going to take a look at the Putnam Large Cap Value Fund report, so buckle up and let's see how this fund has been performing, what they're investing in and whether it's worth your attention. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join the discussion. First, this report covers the 6-month period from November of last year to April of this year. It's a snapshot in time, letting shareholders know how things are going, so it's kind of like a regular checkup with the company doctor. Now let's get straight to the important stuff, costs. These numbers tell you how much of your investment goes towards running the fund. Things like management fees. For the Class A shares, the costs are about $43 for every $10,000 invested, looking at the yearly equivalent cost being 0.87%. The higher the cost, the less money that comes back to you, like a tax on your investment gains. To continue, it's helpful to review the key fund statistics as well as the portfolio. As of April, the total net assets, that is the total value of money in hand, was about $35.6 billion, spread across 105 holdings. Also, the portfolio turnover rate, that is the rate at which the underlying assets are changed, was 10%, so this fund does not engage in rapid-fire stock changing. Okay, now let's shift over to what the fund is actually investing in. They have a wide range of major household name stocks. In their portfolio, a large chunk is in common stock, about 96%. That shows how actively they are investing in the stock market. Peeking at individual sectors, let's name Northrop Grumman and RTX as components of their aerospace defense stock holdings. These two holdings account for nearly 3% of all of their assets. The next largest sector holding components are FXX in air freight and General Motors in automobiles. Banks are a pretty big piece, sitting at 7.55%. Here they include Bank of America, Citigroup and JP Morgan. That sector might be a good insight on how they feel about the economy in general. So that alone accounts for a good chunk of the overall financial health. Another really important thing is oil and gas industry holdings in this fund. ConocoPhillips, ExxonMobil, etc. amount to 5.8%. Depending on where prices go, it can have a huge impact on many of their investments. Also, on the opposite end of those potentially risky investments are also more safe short-term investments. These are things like treasury bills or commercial paper, and the fund held over $1 billion in those. So it looks like most funds are doing well, even when the market is risky. Keep in mind that these are snapshots and change all the time. The report also lists forward currency contracts, basically. Think of these as bets on whether a currency like the British pound or the euro will go up or down. The fund uses these to protect its international investments, but they can also lead to losses if those rates shifts suddenly. They are also trading and holding a small number of futures contracts. These are agreements to buy or sell something like an index based on all the companies at a set price in the future. It's kind of like making an agreement to buy oil a few months from now and locking in the price today. These are risky for many reasons. Now look at something called the valuation inputs. In fancy accounting terms, they are basically saying how reliable the estimated market value of the investment is. Level 1 is good because it's based on actual prices, where level 3 is what they're estimating and therefore less concrete. High level 3 numbers indicate something is more suspect. Scroll to the statement of assets and liabilities. This summarizes where the fund stands near the period April. The overall holdings of 35.8 billion less 193 million gives us a net asset value. The net asset value per Class A share is $34.12, but the offering price on single retail sales of less than $50,000. So it's like going to wholesale as opposed to a retail environment. Here we can see a summary of investment gains less expenses for a net investment result. This report also lists another critical figure as net increase. This is the result of investment performance versus reinvestment and is negative, which is surprising. So let's find out what exactly went wrong. They show 787 million went down, resulting from dividends and gains. So despite managing over 35 billion, they lost almost 800 million due to underperformance. That seems very suspect for the fund. Keep in mind as well that operating costs are over 21 million, so those costs are not small and can dramatically reduce your earnings, especially for funds that are smaller than 1 billion. Now, the next important thing is the changes comparing one year to the next to identify trends. It starts with the operations, the results of investments and operations. At the end, it lists an increase. But what does that mean? Let's find out. This number is an increase due to capital share transactions, selling shares, rather than the money coming from actually managing the funds well through investment results. The best way to ensure the company did a good job generating you financial returns is to look at how much money you received with dividends, not how many other people bought it. Moving on, affiliated transactions mean deals with companies connected to Putnam. It is useful to remember that it has to also manage its own revenue, and that happens through its funds. The section lists that they earned a lot of revenues themselves throughout intercompany transactions as well, with affiliates such as Franklin Distributors, Putnam Cash, or Putnam Short-Term Investment Fund. These amounts are quite standard amounts for this kind of fund sizes. This details that market instability is an obvious risk factor. Also, security investments related risks, not to mention currency fluctuations, can affect their profitability through international investment. Derivatives are the last area of the report and are basically when they make bets. These also, not surprisingly, carry a variety of market conditions. These derivative investments had mixed results overall. So be careful to understand that derivatives are always something that can either dramatically increase fund results or dramatically decrease them depending on economic conditions and how derivatives are handled. The fund operates as a single operating segment. This is basically a fancy way of saying they run everything under one strategy. There is proxy voting. Basically, it's their vote or their decision on who sits on the board of directors. Putnam has outsourced their decision to a third-party company, Glass Lewis. You can view the information on Putnam's and Glass Lewis. Finally, according to their evaluation, it looks like that everything seems effective when it comes to how honest and fair this report is supposed to be. So it's definitely not giving us the sense that this is an outright fraudulent report in any such way. Now that we've dissected this filing, where do we stand? Looking at these results more broadly, Putnam's large cap value fund shows its stability, but recent underperformance raises a flag. The active trading nature and reliance on interconnected company activities could spell issues if external markets change. Ultimately, approach with balance. Alright, that's our breakdown of Putnam Large Cap Value Fund's latest filing. What's your take on these numbers and what they signal for the fund's future? Drop your thoughts in the comments section below. If this analysis video was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out the Discord community where there's even more discussion for more context for future decisions about yourself. Thanks for watching. See you in the next report.